Okay guys, welcome once again to my YouTube channel. So I'm going to take you through liquidity and inducement in smart money trading. So first we need to know what inducement means, and inducement basically means persuading traders to enter the market early. That is what the market makers usually do. So when the inducement happens, um, the retail traders stop losses are taken out, and then the price moves in the desired direction. So in that way, the retail traders were induced to making that bad decision of entering the market too early, and that is the work of the market makers. Well, we discussed about liquidity in our previous video that I shared. If you haven't watched, kindly watch the previous video. Liquidity means where money lies, basically, where our stop losses are. So price tends to fuel after taking out the stop losses. Well, I have a sketchy diagram that I've drawn to help you guys understand what I am about to teach you, or rather share with you shortly. So as you can see this model, this is one of my favorite trading models, and I have back tested it, and its winning rate is good. So let's start from this end. As you can see, the market is on an uptrend. By seeing this break of structures to the upside, meaning the market is on an uptrend. So after breaking this first, sorry, after breaking this first higher high over here, price moved up, and then basic knowledge that you should know: price always moves in a corrective manner. What do I mean by in a corrective manner? This is a correction. Price moved, broke this structure here, moved up, then came down, formed an internal structure here, which I have named it IDM to mean inducement. Then didn't break this high, so this is just an internal structure of which many traders will enter, or some of the traders, smart money traders of course, will enter the trade here. One rule that you should know as a smart money trader: never sell or buy before an inducement. So as you can see, price reacted here, went up, then moved drastically down, mitigated this order block over here, and then wicked just below this low to collect the stop losses that are lying over here, and then price rocketed upwards. So it's not that all times that price will always just mitigate this extreme order block after a break of structure, and then price move to your desired direction. It might collect the stop losses by just wicking below this low. If the body of the last candle closes below this low, now this one might be a change of character, might be. Well, now price broke this higher high here, and then came down, induced traders here again. So if you enter trade here, this is a trap. Price reacted and then moved down to mitigate this extreme order block over here. So price then moved up, created a minor change of character, and always put in mind that a change of character only becomes valid if it has mitigated a valid supply or demand zone in a higher time frame. So this one price came mitigated the I've not indicated, but let's say it has just mitigated the higher time frame supply zone, and then moved down, creating a minor change of character, and then came down, broke this lower low, now confirming our major change of character, which is a valid one. After confirmation of this valid change of character, as we were on an uptrend, now the trend might change to a downtrend. So I want you to pay attention here. Now we have marked our extreme and mitigated over order block as I have indicated here, and price moved after this change of character. Price moved up, and then it didn't mitigate this order block, but swept this high here, this internal high, swept it and then moved down. So after this sweep, might you can enter a short position, but the first candlestick is the one which should just wick above this previous high to confirm the sweep, but not the body closing above it. So you might miss trades if you place your orders here at the extreme order block, which it's fine, but you might miss good trades. Now the trade moved downwards, broke this structure, confirming more move to the downside. Price came, induced traders here to sell early. So if you sell early here, you'll get trapped because it's not a sweep, as I have discussed here. Price went up, mitigated this order block, which had an inefficiency here, making it a valid order block. So, point to note, always take entries after an inducement. Always. Do not enter a trade without an inducement. That's how you won't get trapped. So I will show you my charts here. Let's start from this end. Yes, let's start from here. So as you can see, price is moving. It is on a downtrend. I've marked my break of structures here. Let's start from here. Now, after this break of structure, I marked this order block here. So this is the order block. It is the highest. It is the extreme order block right here. Now, what if I entered a short position from here? Let's see. Let me remove this first. Let's see. Then I place a stop loss just above this high here, just above this high. Well, and then my take profit, of course, must be this low. Well, now if you would have placed your stop loss just right above this high here, the trade would have, your stop loss would have triggered. But if you would have placed just weeks above, then it will be wide, but it will be in a safe, on the safe side. That might be entry one. Well, now sorry, price failed to react accordingly from this order block. As you can see, it struggled to move upside, but then failed to break. Only it swept liquidity. This candlestick here, this candlestick swept liquidity. As you can see, it's only the wick that went above this high, meaning that's a liquidity sweep. Now you can enter your trade easily after this candle closure. You can enter your short position from there. And then you place your stop loss above, pips, just pips above this high. And then you take profit this low. That's a good trade. It's a winning trade. I took it. You can look at the risk to reward ratio. Awesome. Well, let's continue. This low price came, broke this lower low, a valid break of structure, meaning this trade will or might continue to the same bearish direction. So you can place your trade on this order block. It was unmitigated. And then put your stop loss just weeks above, and then take profit at this low right here. So the reason the reason the reason as to why I haven't used this, there is another block here. Let me show you. There is an order block here, then there is another order block here. This one is not mitigated, but that's it. So on inducement, let me show you an example here. Price came, failed to break this low, but pay attention here, swept this low, swept this low. Let me show you. Price swept this low. You can take a long entry right from this. After this week, you can take a long position from here, after this sweep. I'll create a video about liquidity sweep entries and how to spot perfect ones. So price came swept here. If you have entered this position, put your stop loss just below this wick and then target this high. Now price, this is just internal structure. Price, the market makers are just trying to create liquidity. For the retail traders, this is it's a wedge, but for a smart money trader, this is a trendline liquidity. What I see here is trendline liquidity. As you can see, price came and then broke this trend line here, broke it and retested. So for a retail trader, let me show you something here. For a retail trader, trading patterns after a breakout and retest would have, let me remove this, will have entered this short position here, put its stop loss just above this previous high, and then take profit at this low here. Now what happens? Price reacted perfectly and then drastically moved to the upside, triggering the stop losses that were here, the retail traders stop losses. Well, that was not our topic. I was talking about inducement. Now after this sweep, I've seen that this is just trendline liquidity, and then this is the inducement right here. Inducement here. I'll just mark my order block at the extreme here, which is valid because this order block swept this previous low liquidity, making it a valid one. And because it was not mitigated, that's confluence enough to make it a valid one. So after spotting inducement, just place your sorry just place your entry here, just stop loss right below this wick, this low, and then you take profit. You can place it at this high, this high, this high. Now because this is just liquidity and price has already taken out the downside liquidity, there is no any stop losses placed below this low. That's the logic behind liquidity. Now liquidity remains to the upside and it must be taken out. So you'll place your stop loss at this point because I know price will take this liquidity. No, not stop loss, you take profit this high. Well, so it was a winning trade and boom. That's it. Thank you for watching. I hope you have gotten the concept, the liquidity and inducement concept. I will make more videos very soon for you to understand smart money trading strategies very well. Thank you for watching and don't forget to subscribe.